Hi, this is Mike Swanson. I'm in the Bahamas with Dave Skarika.
Yeah, and we're at a kind of a fun area I like to visit here, and it's an area called the Caves. It's very close. It's maybe a 5-minute drive to the airport here in Nassau, and it's kind of a famous area because these caves actually here were first inhabited by the indigenous people called the Lucayans, and they were Indians that lived here hundreds and hundreds of years ago, and they actually lived in the confines of this caves. And it looks like a simple kind of shell out here, but it's quite intensive when you go inside, and the thing winds around for probably 30, 40, 50 feet. And then after the indigenous people, actually the pirates would use these as their hideout. Nassau is actually the last bastion of the pirates, hence why they have a lot of these pirate kind of memorabilia that give you as tourist kind of things here. But yeah, so actually probably Blackbeard and all these kind of famous guys would have hung out in a cave such as this and hid their bounty and hid the gold and all whatever else they had. And also I like to come over here. There's a little daiquiri shack over here. I like to come here and hang out. And there's actually a couple nice condo complexes in this area. One which just above the caves here is quite new. So yeah, so we just wanted to show you a cool little area. And the nice thing about this is you can basically visit this on your way back to the airport. And the best thing about it is the price. This is free. This would cost you absolutely nothing to to visit and hang out at.
Show our buddies a place to look at.
Yeah, we'll take a quick look at it.
Now we're in the cave right now. It's pretty cool always coming down here. I came here with 2 other friends of mine to visit you, and Martin Luther King Day, the market's closed, but we went to Atlantis yesterday, won a couple money, took advantage of other people who are making dumb bets in sports and in poker and whatnot. But it's fun to always come down here. Since you live here, you get to we get to see these sights most people don't see, like something like this cave here.
Yeah, this is not exactly something you're going to find in the suburbs of I don't know, New Jersey or something. But no, yesterday was a lot of fun. Actually, I'm a big football fan, as we've talked about in the past. We actually went to some Raider games in some of our earlier videos, and Patriots aren't exactly my favorite team in the world, so I was having a lot of fun watching the Jets beat them yesterday. And I'm pretty reserved here, but I get pretty rowdy. And I was giving it to some of the Patriot fans, giving them a hard time at the casino. It was a lot of fun. And these guys were over. There's actually a big poker tournament that was going on in Atlantis. And again, another funny thing, this poker tournament was going on for over a week. And all these guys are sitting there for 7 or 8 days losing money every day. So Mike and a couple of his friends come and swoop down at the tables, $100, $200, or $300 in a couple hours, and swooped out of there. Those guys weren't too happy with you.
No, they just kept staying.
Whatever, you got to take advantage of people who are just throwing away their money.
Hey, when it comes to the stock market right now, we've seen the gold stocks, commodities pull back because people are kind of doing the same thing. They're selling out and probably making a dumb mistake over the long term because it's going to go up most likely. Your book is all about the long-term trends of gold and commodities, and here we are having this pullback really the past month in both of those. And what's your take on that? What's been going on in the markets here?
Well, with gold, I follow a lot of seasonality when it comes to gold. So obviously the long-term thing is the whole thing with the devaluation of the dollar and the debt crisis, and too much printing money, and that's probably gold's probably going to go higher in the next 5 to 10 years. But in the short term, usually this time of year, which would be the January-February period, there's a short-term pullback, and then you go higher into the spring. And actually, studies have shown that since this bull market started in 2000, the last 10, 11 years, about 7 of those 10 bottoms in gold price for the year have occurred in January, February. So this is very typical. You get this correction early in the year, then you get this move higher into the spring before again you get another consolidation. So I think this is just another consolidation, and I look at a lot of the momentum indicators on my gold and gold stocks like the MACD and RSI and all that sort of thing. And I'm a fundamental guy mostly, but I look at those technical things to confirm what I'm doing, and I like the fact that it's a very minute pullback. It's a 10-15% pullback in most of the gold stocks, which is a small pullback in the gold stocks. But all these technical indicators are getting really, really oversold. So I think, to me, it's a sign that sometime over the next, today's around the 17th of January as we're doing this video, and the market will start trading again on the 18th after Martin Luther King Day. And I think that over the next couple of weeks, we can begin to find a bottom. The 150-day moving average goal is about 1,300. So I'd expect that to hold on most of the pullbacks. And again, the sentiment, and you're talking about people being stupid, on gold has turned negative all of a sudden, even though it's just whatever, a 4 or 5% pullback. It's like nothing. It's just everyone talking about, guys like Doug Cass talking about pullbacks to 1,100, and everyone's kind of buying into this and all that sort of thing. So I think it's really, really positive. And again, seasonally, the seasonalities are on your side. And see, one thing I talked about in one of my recent alerts, just to kind of finish off on gold here, is there's 3 types of money in gold right now. There's retail guys who are been there for a long term. So guys who are really smart, who bid in gold, who think that the dollar is going down, all this sort of thing. Then there's the big sovereign banks and central banks who have been like coming in and buying them, like most of the Asian central banks. And then the third one is, and I don't listen to the one I don't like, is the hedge fund guys. Now you have the smart hedge fund guys like Soros in the 4th quarter, his biggest purchase again was GLD, his hedge fund. And John Paulson has a big position, and David Einhorn has a big position. But then you got these other guys that are all momentum-based hedge fund guys, and they pump things up too fast and too far. And one trade that they had on over the last few months was the euro crisis trade, where they were short the euro and long gold. But then when this Portuguese bond option went low,
yeah, it was last week.
The euro went up about 4 cents in 2 days, which is a huge move for a large currency. It'll be up 3-4% in 2 days. And gold tanked. So obviously what happened, in my opinion, was, because most of the time when the dollar goes down and the euro goes up, gold should go up, is that these guys had to cover their euro short and then sell their gold long in this trade. Unfortunately, these hedge fund guys are really kind of help to screw up the market in the short term, but over the long term, the fundamentals take over, and you're still seeing gold and gold stocks and other commodities move higher.
Well, to me, it's very similar to what we saw last year in the beginning of the year, because in December 2009, gold and gold stocks started to get weak. They were just correcting, and they kind of fell, and then the stock market went up for a week or two in January last year, and then once the earnings started coming out, like a week or two in the earnings season, the market pulled back too. But the gold stocks, commodity stocks, emerging markets like China, in the South American markets, last year they were pulling back and correcting. And now it's the same thing that's going to happen. Since December, gold stocks, gold's corrected. Almost every market in the world has had a correction, and the U.S. stock market's been the only thing that's been strong. And I think what's going to happen is that the gold and gold stocks will bottom out ahead of everything else, and the rest of the U.S. stuff will probably turn down and follow these other markets down. But all these other markets in gold, they won't fall as much.
And again, I think
at this point, because they've already pretty much been doing it.
The one important point to that is that if you look at last year when the correction bottomed in the summer in the stock market, June, July, the gold stocks had a decline in June, July, but their bottom for the year was in the January, February correction. So I think one important thing for investors to note is, even if you think the stock markets can see a larger correction in the middle of the year or later in the year, is that the gold stocks could very well pull back on their correction.
Well, even in 2007.
This correction.
Or 2008, when you had the horrible crash and all that stuff, and the market was in a bear market, but gold stock, and don't think anything like that's going to happen, but the gold stocks and oil and all that stuff went up.
Until the last phase of the crash.
Until the last phase of the crash. So even if the market didn't go up or whatever, this stuff's most likely to just continue higher no matter what the stock market is.
That's an important point. I think we'll leave that for our next video, whereas I'm going to talk about why gold and commodities might be able to act well in the next bear market in U.S. stocks as opposed to 2008. I think we'll leave that for the next video, as I said, and we'll talk about why you might have good opportunities in those sectors even if the stock market kind of stalls out. And this is kind of the idea and the philosophy behind my book, The Great Super Cycle. And just as a last point here on that is that, we sent a little blast earlier in the day, but again, to repeat that, if you click on this link below, and you can buy a copy of The Great Super Cycle on Amazon.com, and it's a $10 savings from regular price. We've got a special offer right now through Mike that you can get 3 months for free on the newsletter. And so basically for an $18 book, you get 30 months for free. And you just put your email in this box here. You get my newsletter free for 3 months.
But you got to buy the book first.
You got to buy the book first. That's the key aspect for it. You got to buy the book to have access to this offer. And then, you know, after 3 months, we'll give you another offer and see if you like it, and you know, you can become a full-time subscriber.
We'll be talking to y'all later. You get it, me saying.